Hi, I'm Pattu from freefincal, and today I've just published PlumbLine for April 2019. PlumbLine is a list of my handpicked mutual funds. I started publishing this list from September 2017 for beginners and for the users of the freefincal robo advisory template. So once they define their goals and punch in the numbers into the template, they will get the asset allocation and the amount to be invested. So the final step would be the product selection or the fund selection. Sometimes mutual funds will be necessary, not all the times. And if mutual funds are necessary, you can consider picking mutual funds from this list. Now, I want to make it very clear before I get into the list of mutual funds. The link is in the description box or in the playlist right here. I want to make it very clear that unless you have a clear goal and you have a defined asset allocation in mind and you know where to invest, how much to invest in equity, how much to invest in fixed income, and only then look at the products as the final step, will these fund choices make any sense to you? Choosing funds is not important by looking at this list, but you should know how to review the mutual fund and when to get rid of it. This list will tell you when to choose or when to start investing. It will not tell you when to get out of a mutual fund. So you must be very clear, and please recognize that I will not be responsible in any way for your investment choices, capital gains or losses. It's everything by assimilating this information. What you do and what you do with it is entirely up to you, and do not choose funds just by looking at this list because I've said so. I'm just a normal human being capable of making mistakes, and I'm not a great investor. So please read all scheme related documents, and please read the disclaimer in the description box, in the link in the description box, and then start choosing the funds. So with that disclaimer, there's also an FAQ. I will not get into that. So let's get into the different fund categories. So overnight mutual funds is a subset of liquid mutual funds where the bonds that the fund holds will essentially have only 1 day maturity. That is, they will mature overnight. That is, a person will borrow money from you today and they will give it back to you with a little extra tomorrow. That's an overnight mutual fund. The interest rate sensitivity will be practically zero here, and the credit risk will be low. It will not be zero, but it will be the lowest among all mutual funds because the borrowing duration will be just 1 day. So in this category, I have picked L&T cash fund. It's direct plan growth option. You can go to value research and have a look at it. And this is probably if you are worried about credit risk, you are worried about interest rate risk, and if you just want to if you want a mutual fund that behaves exactly like a savings bank account, then I think overnight mutual fund will be ideal for you, and you'll probably get a little more than a normal savings bank account. So just use it for parking money for a short while, and if you want safety and not worry too much about returns. Instead of overnight mutual fund, if you want to choose a liquid fund, then you can choose quantum liquid fund, which does not take corporate risk. It does take there will be some credit risk, and the credit risk will be higher than the overnight fund, but it does the advantage with this fund is that it does not invest in corporate bonds, so you will not have credit default problems. Typically, we expect the fund not to have it, because you can't guarantee anything. And so it will not be highly star rated or 5-star. It will not have those 5 stars because it takes lower credit risk. Now, arbitrage mutual funds can be used as a fixed income alternative. They have low volatility. You can use it for 1 year and above durations, and you can use I have picked UTI arbitrage and ICICI arbitrage because they are more or less pure arbitrage funds. However, please be warned that after the SEBI recategorization, arbitrage funds only need to hold about 65% of arbitrage opportunities. Rest can be in bonds. And if you see last year, I think 1 or 2 arbitrage funds had got credit the island FS credit the payment default problems, and their NAV dropped a lot. So you have to be careful with arbitrage funds. Look at the bonds that they hold. I think these are fairly alright in my opinion. And if you want to take on a little more risk than an arbitrage fund, than liquid fund or overnight fund, you can choose an ultra short term fund for 1 year and above durations. Franklin India Savings Fund, if you look at this, just go to value research, plug that inside. And if you look at the portfolio, among all Franklin debt funds, this is relatively, it's got decent credit quality. It's got A1 plus. Most of the bonds are A1 plus with little cash, and the holdings are reasonably alright. I would say they're not. They do have some credit risk, but it's among other options, this is low risk. But you can still expect some up and down volatility. If you want a slightly higher, medium to high risk, then you can take a Franklin Ultra Short Bond Fund, super institutional plan. Don't worry about the name; it doesn't matter. Retail investors can invest. It will take on credit risk, so you must be careful when you are going to invest in them. You can invest 1 year and above, but be careful. For long-term investments, people have asked me what debt fund should I use for long-term. Then you can consider medium to high-risk fund like Franklin India Income Opportunities Fund. It will invest in bonds with a duration of about 3-4 years, so there will be interest rate sensitivity. So there will be volatility in the now. Also, there is a possibility of credit risk, so be careful. But as an option, it's one. Again, for long term, if you want to invest only in corporate bonds of PSUs and AA plus rated bonds, you can choose the corporate bond fund. It will have medium risk because the duration will be a few years. The duration of the bond will be a few years, therefore the interest rate sensitivity will be high. There will be some credit risk, but it will be relatively lower than probably something with other corporate bonds. If you want even more risk, you can choose, again strictly long term, you can choose the Franklin India Credit Risk Fund. It was called Corporate Bond Opportunities Fund. It will only invest in low credit quality bonds, AA or below. It is not for everyone. It's if you are faint-hearted and if you get scared, don't stay away from this. There is huge credit risk here. But for the long term, you can take a chance with it. I noticed that all the debt funds, most of the debt funds are at least from Franklin, with those at least having credit risk are from Franklin. The reason is that Franklin has it has got the resources to buy. The AMC will buy the bonds if they become bad. So in that sense, they have done it before a couple of times at least in the past. So in that sense, they will not let the investors hanging dry. So I think that is the reason why if you want to take credit risk, take it with Franklin. That is the reason why I prefer that. Now we come to the equity funds, ELSS funds. I had in January I had said Aditya Birla tax relief or DSP tax saver. I think as a performance upside, if you can use the equity mutual fund screener that I published last week, they still have 70% return out performance and 70% or more downside protection over last 3, 4 and 5 years, every possible 3, 4 and 5 years with respect to large mid-cap 250 index. So I think it's okay. These are good enough ELSS funds. But don't use ELSS without proper asset allocation. Use it only if you need it. Otherwise, don't use ELSS funds. I've written a post on that. You can make the best use of ATC. Please have a look at this post. How to use ATC, plan for ATC with expenses first and rather than tax saving. Please have a look at that post. Coming to the aggressive hybrid or the equity-oriented balance funds, I had recommended HDFC Hybrid Fund, which was earlier called HDFC Balance, or the Franklin India Equity Fund, or Franklin Balance Fund as it is called, and ICICI Equity Fund. All the three funds have got very good rolling return and downside protection consistency over the last 3, 4, 5 years. And the reviews, I've reviewed these, at least 2 of these funds here. The links are there, you can have a look at it. I think you should use them, but please recognize that you should use these funds. Treat the balance, all hybrid funds, whether they are balanced advantage or balanced fund, you treat them as equity funds and use it only for long term. Use the robo-allocate template, robo-advisory template for asset allocation for all the equity funds. Equity multi-cap, I have chosen both value-oriented funds, quantum long-term equity, which is explicitly value-oriented, and parak long-term equity. They have very good downside protection and reasonably consistent performance. Quantum has gone through a bad patch, but it is still good outperformance, return outperformance with respect to Nifty 100. But it not so much with respect to Nifty large mid cap 250. But I think it's okay as of now. Quantum long term equity stays in this list, but I will be keeping an eye on it. I am invested in both these things. I cannot invest in every PlumbLine fund. Whatever is relevant to my goals, I have invested. Now, to the index funds, people are always asking, many people are asking, what is the best fund to index fund? Well, should not worry too much about it. Don't look at always expenses. UTI, Nifty fund or HDFC Sensex fund, DSB, you can go for the equal weight fund also, but I don't know the tracking error in the equal weight index, but you can choose it. It will be a slightly higher risk than the Nifty or the Sensex. Maybe sometimes it may have that higher risk may result in a higher reward. I have compared the Nifty 50 equal weight with the Nifty 50 in this post. Okay, but the risk in index fund is that there is no downside protection. If the index falls 10%, your fund will also fall the same. There is no active management in it. If you want a combination of a large plus mid cap kind of funds, you can build these combinations yourself. You can choose. So if you want completely high risk, then you can choose Nifty Next 50 index. But again, be careful. Don't use only Nifty Next 50. I have given it as a category as a high risk index fund, but I would prefer that you don't just invest only in Nifty Next 50. Always use a combination. So don't category 13 is probably unlucky. Don't use Nifty Next 50 alone. Use it in combination with Nifty 50. 50% of Nifty 50 and 50% of Nifty Next 50 will have medium kind of risk, and 70 to 80% of Nifty 50 and 30 to 20% of Nifty Next 50 will have a little bit lower risk, very close to Nifty 100. I have a video on how to combine these two in different ways. You can have a look at that. I have removed the equity large cap because very few large cap funds have been able to beat the Nifty 100, so there's no point. Get rid of the large cap. And in the balanced advantage of the dynamic asset allocation funds, where the fund manager will look at the conditions, market conditions, and invest, you can consider ICICI Balanced Advantage Fund. I think it's only now I remember it, I should probably add ICICI Multi-Asset Fund also along with this category. I use ICICI Multi-Asset Fund. It will also be a kind of balanced advantage fund. It will just have 10% of gold, 10% of bonds, 10% of equity at all times minimum, but the rest of the equity asset allocation will be varied. The multi-asset fund from ICICI is a very good bet for long-term, low volatile option. Anybody who does not want too much risk can consider that. For the mid-cap, because I've reviewed Franklin India Prima and HDFC mid-cap recently, I have considered them. They have very good performance record. You have to give them some time to perform, but they have done very well. Also, L&T mid-cap is also a very good candidate. Kotak Emerging seems to be good. I have just looked at the screener, but I will review this in detail. The reviews for L&T mid-cap, Franklin India Prima and HDFC are linked in the post. If you want an index, ICICI mid-cap select ETF, let's have a look at it. The liquidity seems decent here. I don't know if, you can see that. You can see here the NAV and the price. Some fluctuations in the short term, but I think it's reasonable. I think that's pretty alright. So it has been going well. It was launched 2 years ago. It's been going well. So this is I don't know how much the liquidity will be, but this is something that you can keep an eye on. I'm not saying invest right away, but keep an eye on. So L&T Midcap is also a decent option. I've not added it formally, but I'm just mentioning it. Kotak Emerging, I'll have a look at in detail. So finally, equity small cap. I'm please choose a good mid cap fund that will have enough small caps. That's all you need. Don't get into small cap funds. If you want small cap funds, you can see the video on how to book profits from these funds. Unless you book profits, you will lose. Small caps will zoom up and then zoom down, so you lose everything that you've got in a very short span of time. There are some options, but I'm not explicitly recommending them. Franklin India smaller companies or HDFC small cap, but I'm not explicitly recommending. So that's the PlumbLine summary of the PlumbLine list of mutual funds. Please recognize that it's not important to choose a fund from this or any other list. You should know how to review your mutual fund portfolio. Have a look at this link. And you just choose one or two mutual funds. That is enough to build a well-diversified portfolio. And good luck in your investing journey. If you missed yesterday's video on the quickest way to make money online, you can have a look at that as well. So thank you for listening. If you have any questions or suggestions, please let me know. And I'll catch you again in another video. Bye-bye.